going on, guys? Welcome in, welcome in. What's going on, Danny? Give everyone a few minutes to trickle in. What a day. Really tremendous kind of day. I think a little jaw dropping, pretty much. What's going on, Stonk? Welcome in, welcome in. It's a Thursday. Someone hold my hand. Ah, that's hilarious. That was brutal. It was really brutal. What's going on, Daniel? Gaston! Gaston, how's your puts going? Are you like at like what 500% already? No, actually, you should be at 1,000% on those puts already, Gaston. You have to be. 460 and we dumped. You want to retrace the 460? That's a quite a retracement you're watching for. 460? 446 and you want a retracement of 460. Is that what you're looking for? That's quite a retracement you're watching right there. I don't think I was looking that high. I was looking more so for that 455-ish level. I was not expecting that 455 to 456, but eh, I'll see what it is. Oh, that's what you meant last night. Oh, okay, I was about to say if you're trying to get a retracement off of this move, I was like, what? I don't know about that. Especially how futures look right now. All right, so I'll get started here real quick. Give you guys a quick background story here. I know that hopefully a lot of you were in the class today. I was actually driving home in some rainy conditions when I was actually listening to everyone, so I didn't get to necessarily talk because you would have heard all the background noise with all the rain going on. But hopefully you guys actually took some valuable lessons out of Dan, Avery, Dapper, Sig, and also Dougie, because I know that Dougie pretty much went really in depth on what he does and what his style was. So just to give you guys maybe a quick background for those of you that didn't catch me on there is right now more so I'm just keeping it more so light. I'm not doing as much swing trading as I was before, more so on my position size. Right now I'm trying to do a little bit more debit spreads, especially when I'm doing my swings, because that was really my bread and butter was doing debit spreads, whether it was to the upside or the downside. It was doing debit spreads because when I was actually before I started with TFC, I was working full time and I wouldn't be able to monitor my positions all the time. And that's when I really got into debit spreads more so because it pretty much allowed me to have that leeway where I didn't have to sit there and just watch my positions all the time because the theta and all that other factors that go into just having a naked call out in the money. So that's really been my bread and butter. And right now it's actually paying off because of the fact that with all this volatility going on, you definitely don't want to get raped having an out of the money call or put right now because of how basically the fluctuation that we saw. Like we literally ripped up on Nasdaq 200 points this morning. If you had puts this morning that were naked, you literally got destroyed, just because of the fact of how much that gap up was. Right now, if you had debit spreads and you just let it ride, and it literally made that move back to the downside today, then you would have been completely fine. So that's really the difference for that. So that's really what I'm doing right now is just holding debit spreads, and more so just keeping my positions a lot more light. I did start like a small account per se, but it's more so just for me in terms of being in the bear market and pretty much adapting now that I'm pretty much looking at day trading all day now. Being with TFC is that right now I'm trying to just limit how many trades I take a day so that way I'm not over trading. So I'm trying to discipline myself right now in terms of not taking as many trades as I would before, because like Avery being a gunslinger, I'm the same way as well, right? You want that bigger move, you want to maybe hold a little bit longer than you should. So right now it's just about limiting your options, limiting your choices about the moves you make. So that's what I'm doing right now. I know that I got caught today. I did close green, but I ended up getting caught holding a Tesla position when we had that breaking news that came out with that international breaking news that we had, and I got caught in a small Tesla position, which it pretty much ate up a little bit of my profits while I was scalping. But I ended up closing green. I think I'm about like 5 days green in a row right now, so I'm not too worried about that at all. I am pretty much cash overnight. I'm not holding anything. I really just want to see how this plays out. I know that Gaston's probably holding a shit ton of puts right now, but I'm pretty much all cash. We'll see how it plays out. On another note, I don't think anyone expected that Netflix dropped. As I was watching it after hours, when the market closed and Avery was still there, we were watching it, and I think he had like a price target of like 530 something. And I came back a few minutes later, and I'm like, what if it? I told you it was actually going to 515 or something like that. And next thing I know, after hours, I saw it at like 505, closing after hours. I was like, what a drop. So anything can happen right now. I just hate the fact that that pretty much sets the tone for the rest of the tech sector. I know that Gaston's pretty much going to say that, it's going to be basically a shit show. I think there's going to be a few winners here, but very minimal. So be very cautious. I'm not going to go over the alerts today. That wasn't my intention today. So what I actually wanted to do to more so help you guys is maybe look at pretty much the daily charts, maybe weeklies, just to give you an idea maybe where so you're targeting. Like I actually had one Twitter alert that I looked at AMD off the daily yesterday, and I actually saw that we were hovering the 100-day moving average. And I knew that once we ended up breaking the 100-day moving average below like 127 or 129, it was pretty much going to flush down to 122. Next thing I knew, I woke up this morning and we ended up having a downgrade by Piper Sandler, and the stock was down about $2. Next thing I saw before market open, Kramer was trying to pump it up because he had bought it for his travel trust fund, and that talk it, it literally went up about, I think it literally covered the entire gap this morning, and then it flushed out basically $6 down and hit my target. So that was just a beautiful one. But looking at the daily is more so, and you heard that from the classroom today, is that looking at the larger time frames, and that's what I wanted to do. So I'll take a few ticker requests, and we'll look at some larger time frames. Look at some of the gaps that you're probably gonna potentially be looking at for the downside, and maybe where you want to scale in on a longer term, for your long term portfolios, basically. All right. Did you really just say 440 open tomorrow? All right, so we're at 446. Wait, how bad is futures? Open. No, I don't think you get down that low. I mean, I'm hard pressed to say that. 442, you probably get a little bit of a dead cat and then flush, but 440 open, you would really have to tank overnight here. Anyway, we'll see what happens. But I guess starting out with my SPY chart, I mean, you see all the levels that I'm pretty much watching. I think my ultimate target here is between this 428, 430 level. We'll see if that ends up playing out. Obviously, we can go down a lot further than that. That's pretty much what I have in my mind, that in short term here, what we're going to is between 428, 430. If we end up breaking below that, we'll see what it is. Obviously, you see all the moving averages, and that's what I want to pretty much just point out to everyone. That's really your guide right now. And you pretty much hear Avery, he's not even doing Elliott wave right now in a bear market like this, because it's a lot harder to determine where the endpoint is when you're trading in a bear market, trying to plot out that EW. So he's actually playing it day by day, and that's really what you should be doing. Just using the EMAs right now and pretty much playing it by ear day to day. And so basically what I'm looking at the next level of defense right now on SPY, which may be our last line of defense, is that 200-day moving average, in which you're going to hit that right around 438. So that's what we'll be watching for. And then right below that 438, you have this massive gap right here. Below that 438, you're going to complete gap fill at 436. So that's what you'll be watching for. So deep in, damn, this dude's literally that deep in puts. That's insanely crazy. I will say though, actually, if you think about it, there's a lot of actual traders and maybe funds that actually make a lot more money to the downside than they do to the upside. Maybe that's why there's so many bears out there. But because you see how much and how fast you can drop, literally within a blink of an eye, from Nasdaq being up 100 and something points to down 100 and something points within maybe like an hour. That's how quickly you can get down to the downside. And I also tweeted this morning also, and I'm like, is that you're literally getting these elevators down, and maybe you walk up one flight of stairs to the next floor up before you get that next flush. And that's exactly what's literally been happening. But that gap up, that move today, I was not expecting to push that much on Nasdaq. But sidetrack, back to SPY chart. Again, I'll look for the 200-day moving average, 438 here. Below that 438, we'll get the gap filled down to 436, and then we'll play it by, excuse me, we'll play it by ear there. I do have another little support level right around 433, and then that'll put us below that 433 to put me into my buy zone that I have potentially as 428 to 430. So That's what I'm watching as far as SPY. Update. Did I actually update my QQQ chart? I think we'll see. So, one thing on the spot on the QQQ chart, and this is maybe something that would have been a lot more critical, and this is where we say looking at larger time frames, and this is what I really want you guys to look at. If you actually notice my trend line declining support right here, notice how the wicks actually align, and I'm going to try and zoom in as much as possible so you get the actual idea here. If you see how the wicks pretty much align on that trend line support, if you notice, once you broke today and you broke the Qs right around 366, mid 366, that was your cue to get into puts right there. That was literally your cue because you see from 366, we flushed down straight down to 361. And that was literally easy money right there. But obviously, if you're pretty much stuck to looking at the 5 minute to the 10-minute chart, you're literally not going to go anywhere because you're not going to see the bigger picture when you're breaking key levels, right? Because you would have also noticed that we actually took out the last line of defense also. We took out the 200-day moving average also off the daily. So that's what you really want to pay attention to because you had potentially two opportunities to get in. If you missed an entry at 366, then you would have saw once we ended up breaking that 200-day moving average, you would have gotten at 364 and you still had a $3 drop on the Qs. So that's what you wanted to watch for today, but you wouldn't have noticed that looking at a smaller time frame is what my bigger message is. All right. So that's one thing I was watching. Other than that, if you notice, we're actually in a gap fill right now. Of course, futures are pretty much filling the gap on the Qs here, but we fill this gap down at 357.43. So we'll see what ends up happening there once we complete this gap, which will likely probably just jump over the gap. I do have a small little support level here right around 357, and below the 357, it's a long ride down, straight down to 350 on the Qs. So I'm not too happy about that if that ends up happening, but we'll see what that endures for us. Below the 357 it is. Below 350, I have a zone right here, 349, 350. Below that zone, then I'm watching pretty much the next ride down towards 341. So that's what we'll be watching for. Again, on the cues, biggest thing is looking at the daily time frame, plotting out your zones. That's why you heard in the classroom. Have your game plan, right? Is finding out where those zones are, plotting out where you want to end up potentially buying the dip, maybe buying for an overnight push. You know, as you've seen, Gaston pretty much comes in here every night. He usually says we're gonna end up bouncing here. We're gonna end up flushing here. Watching for those key levels, watching for the key level supports. That's what you exactly want to do right here, right? So that's the biggest message that I have for you. Just outlining how maybe my AMD chart ended up playing out here, if you notice, right? You actually saw that we took out the moving average right here. We took out the 100-day moving average, if you actually notice the purple line right there. So once we ended up breaking 129 on AMD, that happened this morning, you see that we ended up going straight down to retest the breakout point from prior. So we ended up having the peak here from August 4th, getting a nice little retest action, pretty much aligned with the same candle from October 29th. That was your easy retest level, and that was my target to that 122. Obviously, volatility is taking it much lower than that. So my next target right now is coming down to the 200-day, between the 150-day moving average to 200, which will put us at 115. And if we end up breaking that 200-day moving average at 115, my next level of major support will be at 112. So I'm already plotting out if we end up getting down to 112, then that'll be likely the area where I want to end up starting to scale into a long-term position, right? So that's where I pretty much was my message right now is pretty much showing you where those major support levels are on certain takers. But if you get down to this 200-day, between the 200-day moving average, so the level you're watching is 112 to 115 on AMD as you continue to decline. That will be the level where you potentially want to watch to see if that presents as a buying opportunity. All right, that'll be the spot where you maybe want to start to scale in into maybe a leap or pretty much buying shares. You wouldn't have done that pretty much in this entire rise up because you want to do it when the perfect time is when it's a bear market. You want to buy when there's a lot of selling pressure, right? And especially when if you would have bought it on the ride up prior, then what you wanted to do was buy it as close as possible to the 20-day moving average. So if you would have bought this last year, your ideal spot would have been buying this around November 1st, in which you would have bought it between 119 to 120, and that would have been as close to the 20-day moving average as possible. That was your ideal spot if you were to buy pretty much a longer term position before, and that was in November. You would have took that ride from as low as 118 to the highs here of 164. That's what you would have looked for. But now that you're reversing, this is going to be probably a bigger deal in terms of getting a more outdated longer term position as you pretty much collapse right now and watching that 112 level as your key major support. All right. So that's just one that I just had my attention on. As far as Netflix, I think I already broke all my levels on that I was just watching briefly on Netflix. Let me actually see if there's another one, and I think I have to go out to the weekly on Netflix. Let me see. So on Netflix, I actually have, now that we broke as low as 505, and I actually have us going down as low as 416 on Netflix. So if I know that if I end up getting down as close to 416 here on Netflix, I will buy that with both hands and pretty much get a longer dated position on that. So that's what I'll potentially be watching for if we get down as low as 419 here. And with the market volatility, I wouldn't doubt that we see more selling pressure out of Netflix. Um, but of course, there may be a potential bounce just specifically on that name, just because of how oversold the territory is going to be. Keep an eye for a potential bounce. Any bounce that you likely see in Netflix, it may present as a short opportunity. All right. Other than that, I do see a nice little conversation going on here, though. But if you guys have any specific tickers that you want me to look at, longer dated, pretty much daily, weekly time frames, now will be the time where you want to give me some of those names. Otherwise, I'll probably look at a few of the other big cap tech names and probably see if I can give you guys a better idea, more so, of maybe when you want to end up looking at what major support level and maybe what moving average we're currently looking to break. QCOM, I'll take a look at QCOM. See what QCOM has. Take a few requests here. QCOM was just a beautiful chart when it actually broke out. I remember I actually had this plotted before. I don't know why it ended up breaking. We can see a long run down on QCOM. I can see this breaking down quite a bit. I mean, not that the support level really matters as much as the resistance, the prior resistance. Yeah, that pretty much aligns. So you can come down as low as getting down to this 100-day moving average. That would be where I would watch this for. So if you get this down to 132, I would buy that pretty much. That would be my buy zone right there. That would be the retest of this breakout, which if you see, you never got a retest on this breakout of the resistance line, that downtrend resistance. You never got the retest. So this will likely present itself as a retest right now, going down to the one, say right around 134, 135. That'll likely meet the 100-day moving average, and that'll be the point where you want to see it end up getting a nice bounce. If it doesn't bounce at that 134, 135 level, then that's where you're going to be a little more cautious, in which your next level of defense would likely be right around here, in which you're watching for 122. So if I were to give you the two exact levels here, you're watching for 134. Below that will be 122. Those are your two key levels that you're watching for. So if you were to maybe think, if you were pretty much skeptic about where you really want to buy in, I would say scale in right around this level, that 134. Right, once it hits that 100-day moving average, and then if it continues to keep dropping, then your next level to pretty much add to your position will be right around 122. I mean, Bitcoin's pretty much going to follow the market. We've seen this number of times, so I'm not surprised that pretty much Bitcoin's pretty much tanking. And we're likely going to see Mara Coin, all those Bitcoin related names that may even smell trouble for Tesla, which I'll probably get to in a second here. But again, my major level of support here will be 122. My first buying opportunity long term will likely be right around that 134 level. So that's two levels you want to keep a watch on for Qualcomm. Someone did mention Tesla, so let me actually take a peep. I'm hesitant to look at Boeing, but I'll take a look at it. I haven't really looked at it just recently, but I'll take a peep at it real quick. Just a sec. There's so many Tesla bulls out there, like literally so many Tesla bulls, that is like if you say this stock is really gonna tank, they're probably gonna get really offended. That's really the bad part about this. All right, so one obvious thing is this gap fill, right? If you're gonna have the market volatility, and you're gonna see that the market's gonna continue to decline, obviously you're looking at that gap fill. That's pretty much the most obvious thing right now is you're looking at that gap fill below 957. And at this rate, I won't even be surprised if we end up getting that gap fill tomorrow, to be honest with you. I mean, that would be quite a bit of a drop, but I wouldn't even be surprised if we end up filling this gap which will complete at 886. So once we take out this wick low here from 980, then it's going to be literally a straight flush down to test gap fill at 957. And once we hit 957, obviously, of course, it's going to depend more so upon how much we tank in the market. And obviously, Netflix being down so much, they're going to keep something elevated for the most part. I would likely expect this though to end up getting into the gap fill and likely completing. So 957 would be my target tomorrow to test the gap fill at the very least. If we don't end up, if we end up breaking below that gap fill, then obviously you're completing that at 886 tomorrow, which is almost, that would be about $100 move. Yeah, you're looking at 100 and some dollar moves. So I haven't seen $100 move very lately on Tesla. I wouldn't rule it out though. But at the very least, I would probably likely safe bet I would target 957 to test the gap fill. All right, that would be where I would likely look at potentially tomorrow. That may even be my 0 day. Of course, I want to limit my exposure and how much I'm going to end up spending on that. So likely will be a 0 day put spread that I'll probably be looking at for that. But that's what I'll be watching for. Other than that, I know that we also have another gap that we're watching here, and this is really going to be a tough one if it ends up breaking down that low, which that's where a lot of the Tesla bulls are really going to be raging right now. If we get into the zone here below 851, it's going to smell a lot of trouble. And I believe right now, if I'm not mistaken, the last target I heard that Tom even had was around 880, which would basically put you right below this gap fill right now. So that would be the line of defense that you're watching. My next major support below that will be right around. Let me actually see. All right, I smelled that. I pretty much said that wrong. 957 was your gap to 939. I take that back. Sorry about that. It actually says 880 something. So 957 to 98 to 939, which could be easily filled. That's a $60 move that you're looking at. But major support that you're looking at would be 894. That would be your major support that you're really watching for. So we'll look to see if that ends up holding that level right there of that 894. If she doesn't hold that 894, then the most obvious thing is that she's going below that gap, so below 851, and that's going to smell a lot of trouble. So I can see it end up going down to this gap fill below, more so because of earnings. And I don't think it's going to be because of market volatility. It's going to be likely because of the earnings, and a lot of people end up selling their Tesla and market makers not likely not liking whatever's going on. And of course, you also do have the Bitcoin factor in which Bitcoin is likely going to end up hurting them along the way into their earnings. So that's something that'll likely escalate. So I wouldn't be surprised also if we're around that 900 mark once they report earnings. And then, of course, the earnings will be the determining factor whether you bounce from that 900 point or you end up flushing down to the gap fill below, in which you're going to have a date pretty much with a 200-day moving average sitting around 852. All right. So bigger picture though, tomorrow you're watching for this gap fill between 957 to 939. That's what you're watching tomorrow. So we'll see if we end up getting that gap fill tomorrow, and that'll be probably maybe my main watch, maybe my even my only trade that I take tomorrow, and we'll see what she does. Other than that, someone mentioned BA. Let me take a quick peep at BA. I don't know how bad BA did today. Actually, it's not that bad. All right, I'm gonna clear the chart because I don't know how old that was. This just has to be the ugliest chart right now. In terms of just price action wise, it's just horrible looking. So if I'm looking at this right now, you're sitting pretty much right at the 20-day moving average right here, right around this 213. That's your pretty much your support that you're watching right now. Next level down would be holding the 200, the 210 level, which will put you at the 50-day moving average right now. So that'll be the ugly part. I can easily see us coming down to this 50-day moving average pretty easily. As you see, it's pretty much crossed under. So that will put you at around 211, 210. And then if we end up breaking below that, and I want to see if we end up having any kind of gap that needs to be filled. And damn, that's a fat gap. Ew. Did not realize we had such a fat gap on Boeing right here. That is not a healthy gap. And of course, if market's coming down, we know that Boeing's going to come down primarily because of how much weight it holds in the market. So if I would be hard pressed to really want to be in Boeing at all right now. And if I were to touch this for a long term position, I likely would stay away until it ends up completing that gap fill, that major gap fill below. If you really wanted to test waters and this would maybe be a short buying opportunity potentially, it would likely end up being right around this 187 level. Will be where to test waters for a long-term position. But other than that, I see this end up flushing below this 187 level, and you're gonna end up likely getting this into the gap fill. So I mean, I wouldn't even touch this unless it came down to this 154 level. I really wouldn't even do that. That would be the completion of the gap fill, because right now you're already pretty much trending below the 200 day, which is usually your last line of defense, and it's not looking healthy. So if the market's gonna drag, we're gonna see this continue to drag down as well. So just be cautious of that. My bad. 1 second, guys. Wow. Okay. All right. So again, the major gap fill is the problem here. We know Boeing's already in debt. We know that this is pretty much just been propped up by the market. So if the market's gonna come down, I expect this to come down with it. Once we end up cracking this 210 to 211 level, you're likely gonna see this pretty much just get a nice little quick flush along with the market. All right. Other than that, I think that's pretty much calls it for tonight, guys. Hopefully those at least help you guys for the most part. You have 215 February puts. I would definitely hold those puts. I would not let those puts go. Those are literally gonna be money. As you see, pretty much like Gaston, he ends up buying at the top, and he literally just holds it perfectly. I mean, you hold with conviction though. That's really what you want to do. Make sure you hold it with your TA. I mean, if I'm looking at that, you're looking for a break below this 210 to 11 level, and it's going to be a straight right down towards this 191 level. So I would definitely hold on to that, and that will likely end up paying, especially with this market volatility. But again, big picture, hopefully you guys end up keeping your positions small. Look into spreads. I think that's one of the biggest things that's actually helped me a lot personally. So maybe that'll be something that helps a lot of you that end up having, smaller accounts, or you want to end up risking less money right now during this market volatility. That'll be my best advice right now. But as long as myself pretty much just trying to stay cash overnight, because I do not want to get slaughtered. If you saw these past few days, you get pretty much a dump during market hours, and you're getting these gap ups. So there's nothing to say that you're not going to wake up one morning and it's literally going to go the opposite direction. So that's what you want to be cautious about. Sid, someone had me just look at QCOM actually. I think I just looked at QCOM. Yeah, this is the one I looked at. Pretty much just watching. There's two levels that you're watching, and big picture wise, why did that seem like that? You're watching for a retest from that prior breakout that you had back from earlier in November. So you're gonna get the retest here down to the 134 level. Once you get that retest down to 134, your next major support level will be 121 here. Take that back. 122 will be your major support level. So if she can't hold 134, your position to go long will be 122. That'll be the levels you want to watch on QCOM. All right. Other than that, though, again, hopefully we have some kind of better direction tomorrow morning, in which, likely it's gonna end up being a nice little flush in the morning. So we'll see if we end up getting some kind of sympathy bounce at the opening bell. Otherwise, it's gonna be a long ride down, and I'm hard pressed to really just say, you know what, you should go, follow and chase the market trend tomorrow morning, especially if it goes the same direction that we gap up. Be cautious of that. All right. So if we end up gapping down quite a bit, I'm hesitant to really just chase that move, because it feels like it already went without you, right? I wouldn't want to be that guy where I end up pretty much trying to chase the move down. You maybe get maybe a 5% move to the downside, like off of your position. You're gonna get 5% of gains, and then guess what? It's gonna reverse hard on you. So be cautious of that. Just try to keep it small. This is not the environment where you want to look for any kind of gains above 50% more so, because you're definitely going to be against the market with that. All right, unless you're really holding puts and you're probably getting longer dated expiration and holding, you definitely want to just take quick profits. All right. And I think that's what Dan pretty much mentioned earlier in the classroom. Just be very quick to take your profits. All right, guys. Don't try to just hold out and saying, you know what, I think it's going to go here. I think it's going to go there. If you're going to hold it with conviction. No, trust your TA. Trust the moving average. Trust the trend line supports that you have, or the resistance, and follow the game plan. All right. Other than that, though, I will see you guys on live tomorrow morning. And hopefully this market gives us something a little bit better to look at tomorrow. All right. Other than that, you guys have a good night, and I will see you guys in the morning. All right.